Hi, my name's Ashley Jessen from LearnCFDs.com, and today what I want to talk about is the stock market crash in 2017. But I don't want to talk about it to suggest that that is going to happen. I'm going to tell you about the number one way to spot the warning signals. Because to be honest, there are so many people predicting a massive stock market crash in 2017 that it's a little bit disheartening, to be honest. The markets have done nothing but rise and hit new all-time record highs consistently at the start of this year, especially with Trump being put in at the end of 2016 and then his inauguration. So it has been full steam ahead for the stock markets, especially the Dow Jones plus 20,000. So let's take a look a little bit closer here. So today what I'm going to show you how to discard the doomsday economists. Those guys are predicting doom and gloom. We're going to show you how you can actually see for yourself and totally ignore what they've got to say. The tools you can use for free to spot the warning signs, and how to take control and not be scared or fearful. Because it's your portfolio, many of you will have a retirement portfolio, you want to hang on to that. You don't want to lose massive chunks of that money, especially if you've got a self-managed super fund or a 401k or whatever it is in your country. You want to make sure you're protecting all of that. And I want to give you plenty of examples as well, so let's go and take a look. So you may have heard some of the sensationalist headlines. The stock market could crash 70 to 80% in 2017, and funnily enough, they've been saying this for quite some time actually. So let's jump over to YouTube and see exactly what they're saying over there. Alright, so I typed in stock market crash 2017 and let's see what we've got here. Stock market crash, yeah, it's going to head down. Stock market crash will be big in 2017. Imminent global economic collapse 2017. Stock market crash, top economist predictions. The next stock market crash is near. Here's proof. The crash is coming. 2017 will see the biggest stock market crash the world has ever seen. Will the stock market crash in 2017? Of course, S Dent has been very, very vocal about a huge stock market crash, with the S&P 500 pulling back to crazy low figures and the Dow Jones pulling way back to like 6,000 or 7,000. And the stock market continues to go up. 80% stock market crash to strike 2017. Like, these are sensational. If I go over to Google, type in stock market crash 2017, same sort of thing. 80% stock market crash to strike. Economist warns, here's why Trump-induced stock market crashes on. Oh, there's a positive one. Wow, okay. Will the stock market crash in 2017? So you get the picture, right? So let's have a look what this is all about. So what we want to do, we want to be able to somewhat predict it, at least know that something's going to happen. And we don't want to be reading these sensationalist headlines, going over to Bloomberg or CNBC or listening to Harry Dent or something like that saying the market is going to absolutely collapse. And they've been saying that for many years actually. If you go over to Zero Hedge as an example, there's a big following there of the market is going to completely crash, the US dollar is going to get wiped to nothing, and so on. So what we want to do is just change things up a little bit. We want to keep things very simple, and we're going to use something called the Dow Theory. It's over 100 years old. Back in the early 1900s, Charles Dow developed the theory, and there's a few things. I'd highly recommend that you go and do a Google search for Dow Theory, but we're going to focus on one simple thing. Prices move in trends. The primary trend will stay in place until it's knocked out of the trend. You've heard many times the trend is your friend until it bends at the end. Well, there's no difference here. We're just going to use the Dow Theory. We're going to use things that are very simple, and I'm going to show you a free place where you can actually do that yourself to have a look for the big stocks on the US market as an example. Now we're also going to have a look at some of the Aussie stocks, but we're going to have a look at the indices, we're going to have a look at some foreign exchange and gold as well. So let's see if we could avoid some of the recent examples of these big sell-offs. So we're looking for the warning signals, the big sell-off and they're the lower highs and the lower lows. So let's have a look here. We've got the S&P 500 here, and what you'll notice on this one, this is going to August 2015. There was a big sharp sell-off there. Do you notice anything in particular? That's a 100 period moving average. Okay, for starters, it's pretty flat. It's not in a huge uptrend, and in fact over here it's starting to head down, of course. Moving averages are lagging indicators. They're not predictive. They're not going to suggest anything, but remember we're pulling everything back to the bare basics. Now what you'll notice, Dow Theory, lower highs, lower lows. You'll notice that at the top here it peaked. It was hitting a higher high. Lows were getting, there's a bit of divergence there as far as that's concerned. The lows were getting lower and the highs were getting higher. However, at this point it started heading the other way. We got the first lower high and we got the first lower low. Okay, we then got a subsequent equal to lower high, and then it started to break down. Now this is a little bit of a wedge pattern here that's a little bit tricky, but at this stage, once you start getting lower highs and lower lows, that's where your warning signals are. Okay, you want to start putting some trend lines in to see where things could break. Now, to be honest, in a consolidation like this, if it is off the back of an uptrend, it could also break to the upside. So that's why we start to note the warning signals at these areas here, the common points. For this market to fall 30%, it has to break that support level at 2035. Okay, or 2040 or somewhere just in there, right? So it needs to break that level there. For it to get all the way down here, or even at 1600 or 1000, if it's going to absolutely plummet, it needs to break that level there. So that's where you start putting your warning signals in. Okay, let's have a look at the S&P on a daily. This is going, at the start of 2016, we did have a significant price drop. You probably remember markets opened in 2016 and it had one of the worst starts of the years in like 30 years of all the history of the stock markets going back 200 years. So another common thing you'll find, first of all, the long-term moving average, the primary trend is heading south already. Okay, so you don't want to be necessarily trying to buy long and hope that the market's going to go up for a long time. What we're noticing here, lower highs, first low there, then it got broken, first lower high, first lower low, next subsequent lower highs, and then we're starting to see if it's going to fall 30% or 10%, it doesn't matter, right? It's got to break that level there, 2010, somewhere in around that vicinity there. Okay, breaks it, and that's our warning signal. That's our warning signal there. When we first get, that's our first warning signal when we get lower highs and lower lows. Next, what we do is we put in some just common sense points that if it's going to fall 30, 40% or even 5 or 10%, we need to see it break this level here. If it starts to break back up and hit a higher high, then that's null and void. It's now going into a new primary trend. Okay, so let's have a look at another example. We've got the pound. The pound was a huge one, obviously, with the Brexit. However, I'm not looking at that. This is 2015. Once again, like that's a pretty significant fall. Right through there, 1.51 down. That's 10 full cents, right? 10 big figures, pretty crazy. Okay, so we've got subsequent, successive lower highs, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. Okay, at all that point through there, that's your warning signals. This just here, oops, my bad. That right there is actually a warning signal, and then it starts breaking support lines. Okay, so there's warning signals all throughout. Let's have a look at another one. Gold. This is a more recent example coming through to 2016, moving into 2017. Once again, just through here, you'll notice some warning signals, even though the market was in a fairly strong uptrend through there, heading up to the 1360, 1370 level. It was very, very bullish through there, which was a good time to be long, obviously, because lows were getting higher and highs were getting higher. However, once again, first warning signal, first lower high, and we've set a low there. Then it breaks that low with subsequent lower highs. Okay, we start to put in our lines through here to know that it's breaking through here. Once again, for it to get all the way down here, it has to break these levels up here. So we've got the first warning signals, then it starts breaking key support levels, and that primary trend has now started to change. The primary trend is changing, and that's a huge warning signal that something is not quite right. And then, as you can see, it falls off quite considerably. Now let's go back to, what are we on? Gold again. Same sort of thing. This is going back to 2014. So at 1330, it was hitting a high, but the long-term moving average, the 100-period moving average, was pretty flat in any case. So that would have been a short-term uptrend. However, even off that short-term uptrend, starts hitting lower lows and lower highs, lower lows, and then it starts breaking key support levels, and then boom, lower lows, lower highs, and it keeps going from there. Look at another example. Now, even back to when gold was in a roaring uptrend and people saying gold's going to go $3,000, $5,000, $10,000, it's going to be unbelievable, we start to see plenty of warning signals back there as well. So again, we got higher highs, and then we've got the first lower high, second lower high. The lows are starting to get set in place. A little bit lower there, a little bit lower there. So nothing too obvious, because obviously the consolidation, the smart money's starting to get out at some point. And so the smart money is always leaving clues. That's another real big tip I want to leave with you, is the smart money is leaving clues. And the clues are, if the smart money is getting out, they're moving large sums of money, and there's footprints. And we're noticing the footprints with the Dow Theory, the primary trend, keeping it really simple, trying to find lower highs and lower lows. Once again, it just can't break through. So this primary trend is starting to change, starts to break key support levels through there, and boom, starts to head back down. It was never the same from that point in time. Now that was a weekly chart, by the way, so there, each of those candles is actually a week. Okay, let's have a look at the Japan 225. On the opposite side of things, when it isn't a downtrend, for it to move back into an uptrend, you don't have to. We're looking for the primary trend to change, and a lot of the time it takes 6 to 12 months, and this is what the Dow Theory is about. The primary trend is the really key significant thing here. We start to see those warning signals. A long consolidation, we're looking at many months of consolidation through there, but we start to notice that the lows are getting higher and we're starting to break new recent highs. 100 period moving average starts to change, and then it forms what we call a 45-degree angle. It's through here that it is a little bit easier to actually trade long and to make money and to follow the breakouts on those particular trades, as you can see through there. Now that was a bit of an outlier day, that one there, huge swing there. Can't tell you exactly how that was a Trump, the US presidential election, actually, so plenty of volatility through there. But in that case, already prior to that, the highs were getting higher, the lows were getting higher as well, and then it continues in that uptrend. What else have we got? Japan 225, same sort of thing, beautiful uptrend in place here. This is back in 2013, 2012, 2013. Highs are getting broken, lows are getting higher, and then boom, beautiful uptrend, 45-degree angle, really, really nice trending move there. Okay, what do we got here? Aussie Dollar. Aussie Dollar, when it was up at a 106, way up at the highs. Obviously, people saying, oh, it was hard to tell that it was going to go to 80 cents or 70 cents or whatever the case may be. But let's have a look. Were there any warning signals? Okay, at the top here, markets were already consolidating because it came off 109, 110 levels. Highs are getting lower. Lows are getting lower. It starts to break key levels there. Once again, trying to break up, but it can't. Forms new lower lows, new higher, lower high, and then it starts to break key support levels there. Big downtrend in place after that. Okay, so how can we protect our capital? Let's have a look here. We want to trade in the direction of the trend. Keeping it really, really simple, you can put a 100-period moving average on the charts. Don't buy stocks or indices where the 100-period moving average is lower today than it was yesterday. So let's just keep it super simple. Let's have a look. Is the 100-period moving average rising today compared to yesterday, or is it falling? So let's go and take a look at a few examples. First of all, what I'll do is I'll have a look at I want to give you a free example. I use Metastock myself. I love using Metastock. I've used it since the year 2000. I highly recommend it. It's a fantastic program, and you can run your scans and all that type of thing. What we're looking at here are some Aussie stocks just to see if we could predict something, and then I'll pop over and give you the free source, and I'll show you some US stocks to see what sort of warning signals might be in place right now, because remember, the economists are giving that doomsday warning right now. So let's have a look at a stock called IPH, right? There we go. First lower high just through there, started to break into lower lows in that point there, and we're starting to see something move. That was in a roaring uptrend, keep in mind, and it's moved pretty quickly into a downtrend. We're talking about $9 down to $4.50. That's a huge move down. Once again, we start to see there's a warning signal there. Even when it's hitting equal highs, there's actually still a warning signal there because we're getting a lower low through there. It's broken it. Then it's breaking those levels again even further, and then it's continuing down. Okay, let's have a look at the next one. Village Roadshow, once again up here. Actually, a moving average is heading up, higher highs, higher lows, looking great, but it starts to break those lows, starts to head down. We get a little bit of confusion here, big divergence, lower lows, but then the highs just got up through there. But you can see the same sort of pattern, right? It starts breaking those key levels, but the highs keep getting lower. That's your first warning signal. Then the trend starts to form pretty strongly. All right, Vocus. Once again, beautiful uptrend in place, but something starts to happen through here. The primary trend starts to change. Now, for it to go from $9.50 down to $4, if someone was to tell you that that's going to happen, you can say, fantastic. Let me just check for myself. You don't need to worry about some economist or some doomsday say it's going to happen. It leaves warning signals. Remember, for it to fall 50%, it has to fall 5 or 10%, and that's where we start to get those warning signals. Bellamy's, same thing again. Some people were so disappointed that Bellamy's fell. There was some major announcement, China and the supply over in China with the baby formula milk and that type of thing. Lows getting lower and the highs getting lower through there. So it's no surprise that something like this were likely to happen, or it could happen. We just don't know when it can, but we start to take our money out. The long-term moving average was just going sideways. Okay, let's breeze through these. Surtex Medical, same sort of things, going from $40 down to $14. These are huge downtrends, but plenty of warning signals way, way, way back. S Dent Health, same sort of thing, up at $7, now $2.69. Huge warning signals through here. Let's take a look at another example, CSG. $1.70 down to 76 cents. Plenty of opportunity to take your money off the table. Adair's had a massive fall, gap down, $2.50. That's the other thing with Dow Theory, the prices tend to gap in the direction of the most dominant primary trend, and in this case it had been down, it definitely wasn't breaking into new highs. Really struggled at these levels here, and then it fell considerably. $2.70 now down at $1.33, and that's it on that one. So what I want to show you is an example on the US market, and I want to show you a free way to do it. I like to go to free stock charts, okay, freestockcharts.com, and here you can type in any of your favorite ones. Let's go to Apple. Is the market going to crash? Is Apple going to crash? Well, the moving average is beautiful and up. It could fall from here, sure, but it's hitting higher highs and higher lows, so we need to move on from that one. That doesn't look like a crash is imminent. Microsoft, beautiful uptrend in place, 100 period moving average is rising nicely. Highs are getting higher, lows are getting higher. No problem there either. Let's have a look at Google, Alphabet. All right, once again, highs are getting higher, starting to hit a new lower low. So that's one to watch. Interesting to see how that one pans out. Let's have a look at Facebook. Facebook's in a little bit of a consolidation at the moment. Lows are getting lower, but then the highs are getting higher as well. So we need to see a new warning signal with the lows getting broken just here before any sort of crash is going to happen. Amazon, what's it up to? Okay, so we're definitely getting some warning signals on this one. The 100 period moving average is flattening out. Lows are getting higher, and then it's broken, but it hasn't broken those levels there. The highs are still getting lower, so we need to see what's going on just through there. And now we watch these lows here to see if that will actually fall lower there. What about GE? These are some of the big ones. Now something's already happening here. The 100 period moving average is already falling down. Lows are getting lower just through here, as you can see, and it's not breaking back up into new highs. Lower high through here as well, and lower low, so not so good there. What about Walmart stores just through here? Not looking good. Lows are getting lower, highs are getting lower, so they're ones to watch out for. PG, last one. All right, so as you can see here, it's in a consolidation. Lows are getting lower, but then it started breaking into new highs. However, it still hasn't broken those levels there. So as we talk about, this starts to become the big consolidation. Now, that consolidation could lead to a massive break higher. We don't know, but we're going to see those warning signals if it's going to break lower. So that's how we're looking for these warning signals. All right, so in conclusion, you don't need some guru telling you the market's about to crash. You don't need that. Harry Dent saying that the market's going to fall 70, 80%. It could. It might still do that. But if the market is going to crash 30%, it has to fall 1, 2, 5, 10% before it falls 30%. So we look out for the warning signals. Jump on a free stock charts. You probably have free charting software already. You're probably already looking at charts. So don't worry about a stock market crash. Don't worry about the economists. Put the control in your hands and start to look for the warning signals. Keep it really, really simple. Apply Dow Theory to the bigger picture, the primary trends, and see how you go from there. Really hope that your trading is going to be fantastic in the year ahead. So do your best and watch for the warning signals to see if anything does happen. All the best. Thanks.